Okay, today is August 12th. This is the end of day review for the S&P E-mini. We are going to jump right into the 60-minute here. And what you'll see is that we balanced for the morning, and that usually leads to an afternoon trend, long or short, hard to tell. Something that you may be familiar with price action, something I care about, is that once you break out of a channel and you return to it, if it attempts to break out again, in a lot of cases, it can lead to another strong move out. So I anticipated seeing this move higher. You never know how high, really, it can go, but in a lot of cases I've watched and observed over the years that channels, when you move across the channel and then break out and then pull back, usually you'll fail somewhere between that pullback leg and the low and go back across or go to the mid of the channel. But if it holds up there, if it doesn't balance, in other words, no breakout at all, in a lot of cases, a breakout to the upside in this kind of situation will often lead to a trend higher, especially in the afternoon if it balances for the morning session as it did this morning. We also had a London low and New York low sympathetic to the Globex open. So that all kind of leaned in the direction of a possible afternoon trend, which I thought was going to happen. Now, on the 15-minute, you see a couple of interesting things. We've got significant highs, microstructure or market structure shift, sympathetic lows, as I pointed out before, and fair value gaps at those pivot points. So that's important because you get a gap here as you're breaking these significant levels. This level in particular, 4240, roughly 4240, 4242, something in that neighborhood, in that location, was a very significant pivot because it was a rebalance test of this fair value gap from yesterday. So that's a significant high. If that doesn't get taken out, then the bias shifts to the short side with the idea that we would take out this liquidity here in the short term and then run lower. And that is what we tried to do in the morning. However, this 19 level became significant because it's essentially the same as that. It's the same, it's the mirror analog of that. If this gets broken, chances are we're going lower. If this gets broken, chances are we're going higher. That was my hypothesis. As you move down into the 5 minute, I actually zeroed in on the 5 minute micro, I'm calling it microscope because there was a couple of very radically interesting things that happened in this balance open that I want to point out. First is I took the wicks off to note the close locations of this balance area here, and this balance area here, and here, and here. And the first thing that should jump out to you is that as you draw this across, these closes are below that. As you draw this across, you should see those closes are above that, above here, above there. So the wicks go much lower, but then you see that this closes above that. And that's the first clue that we might be going higher. That was actually the very first, in my mind, radical clue that we were probably going higher. This was the actual first clue that we were going to go higher when we did not break that low on that lower high push, or excuse me, higher low push. You'll see here in a second. So note that we make progress on the close of the bar even though we retrace the range. And then we come up here and we make progress to the upside in terms of the close, not in terms of the price. That's fascinating. And as we come back down, the closes are even higher. And note right where they are. See that? They're holding. So in my view, we took out the buy side liquidity, but that did not push us down, even though we tried once, twice, three times. And then look at where the closes are relative to the to where you'd think it would be if we were holding, if we had all the liquidity we needed. So then as you add the wicks back in, notice that this looks really choppy and sideways, but there's something here that if you're paying careful attention to this, and I was, is that notice that we test down into what I think is an order block right here, the very first test pipeline of inventory, get to the mid of the lowest part of it, and we tag it, and that's 2 ticks. And then comes back down again after making It made a high, then a lower high, so it tests deeper into the pipeline. It tests right there, 2 ticks, and that's 5 points, and that's 5 points. This exact scenario happened on Wednesday. Exact scenario, exact algorithm, played that out. Then it was my hypothesis that once that low went in and we made a double top, that if we held this price right there, that we were going to be breaking out. So what does it do? Comes down, tests that price, pushes through it by, you guessed it, 2 ticks. Now, what's really important on this one is that I wanted the secondary test of that, which is right there. And then you push higher, push through, and then we do what Al Brooks calls a small pullback bull trend for the rest of the day. So note what was important is to note the close locations and where the liquidity was that we were taking and what prices we're holding. Very consequential, very logical. Now, when you add that to the daily bias of being long based on sympathetic London and New York lows and being above the Globex open and likely looking for liquidity up in the 4,300 range as a possible higher side target, that logic gives you a lot of strength to go long and hold. Now, as it is, I only see three legitimate trade locations here. This is early. I mean, all the structure's there, but that's the first long, there's the second, and there's the third. The rest of this is just too small to take advantage of, although I am probably going to look at it for bar proctoring this weekend. But the reason I didn't trade is because I was done on Wednesday and I was working on the coursework for process management. So it's part of my self-discipline to have met my target for the week and then control myself to not trade even though I see opportunities. So process used was price action, daily and weekly bias based on we are drawing to an important price above us. Price action channels and trend lines. I was using that as a piece of my information, and then also the closes and the mids of bars that represent order blocks, and that put me successfully on the right side of the market in terms of my analysis. I didn't execute, so it really doesn't mean anything in terms of I didn't prove anything, but it proves to me that my analysis is correct, and that makes me confident in the kinds of trade decisions I can make. So that's it for today.